Y'all ready to get fucking reckless tonight? Let's do this shit!
We are so fucking back, baby, on a beautiful summer night to welcome the return of your king, the dubstep daddy-o himself. This guy. No, wait, hold on. This guy. No, fucking shit. It's this guy. Now, before we continue, I would like to kindly start a petition that brings the gorge at least an hour closer to Seattle, because this drive is absolute fucking horse shit. No, just me? Okay. Back to dubstep. Alright, he was here at the first year, and the second year, and the third one. Oh, wait, no, not that year. And the actual third year with his bestie Kaiwachi. Then again in 22 and 23 and not that one either. And he's finally back in 2025. However, if this is your
Going beautifully, man. Welcome in. Welcome in, everybody. How we doing? Buenos dias, buenas tardes. Good morning, good afternoon, wherever y'all at in the world. Happy to be back. All right. Today will be a fun one. It'll be a little bit different from what we've had in the last couple weeks, but it still should be very interesting. Go ahead and pull this here. We're gonna be talking about sustainability. It's gonna be a fun topic. It's funny because I think sustainability in crypto is kind of like an oxymoron. A lot of the stuff is not really sustainable, and we just pretend it is until it all comes crashing down. But not only are we going to talk about sustainability, but also be doing sort of like an example overview to really hone in like the idea of sustainability is something we don't really have in crypto, but I think there's a lot more focus on it now than it was the last couple years. So, and one of the examples that we're going to look at today is called Addicted.fun. You guys might have heard about it. It's been all over the timeline. It's been going nuts. It went nuts in the last couple weeks. And Addicted.fun is it's a really good example to look at when we talk about sustainability because they started very Ponzi-nomics, but they were very straight up about it. They understood like, hey, this is not sustainable, but here's our plan to make it sustainable. And I think it's a really interesting approach because a lot of projects don't come in just telling people, hey, this is not sustainable, but it's not going to be sustainable for long. And I think that's why the topic for today is looking at addicted.fun, but the idea from Ponzinomics to sustainable DeFi gaming. So even though we're going to be looking at addicted.fun as a specific example that we cover, it's going to be a conversation more overall about sustainability, what that looks like, how projects are starting to implement it, and whether, it will work. That's the big question here today. Well, how we doing, Crib? I see you in there. Arshmello, welcome back. Good to see y'all. The young prof, always good to see you here. And it's fun because we're gonna be touching on like the idea of trying to stay sustainable, but also finding early opportunities and how that may look for people. Right. So the goals and outcomes for today. Pretty simple. The core goal is to understand how Addicted.fun is evolving, and I put in parentheses here, or at least trying to, from an unsustainable mining/farming reward loop into a more balanced long-term game economy with season 2. Which season 2 is not out yet, which I think it's really good that we talk about this today, because we get to think about the theories and the philosophical point of view before it actually happens, and then maybe in 2 weeks we'll see if they drop it by then. How is it working? Is it looking good? Did it work? Was it a flop? And then also, with season 2, they're introducing cartels, PvP, real utility loops, all that good stuff. All right. The first thing we're going to talk about here is obviously sustainability is the biggest challenge in DeFi games. And I went ahead and made a specific point in terms of DeFi games because I think even though the example that we're looking at today is a game in general, it's more DeFi than it is game. It's more about like the DeFi economics of it. When you go in there, you're not really, playing a game as you would in just general sense. And there's a lot of crypto games that are more games than they are crypto nowadays. So that's why I put a DeFi game in here because I think it's a very specific distinction that I think we can make. The, we're gonna first define Ponzinomics because I know you guys probably have all heard of it. You guys have either been part of it, participated in a Ponzi, even though you knew it or not. We've all been there. I'm in there myself. I have been in plenty of Ponzinomic style of games, projects, protocols, and sometimes it works out and sometimes it just implodes. So defining Ponzinomics is very simple. Ponzinomics just means that the reward systems that rely on new players entering to sustain the old ones. So, for example, I'm getting, $500 of rewards every single day. The only way that that's going to become sustainable is if I'm selling $500 a day, someone else is buying $500 a day, and it sort of balances out my selling pressure with buying pressure from other people. One of my biggest plays in 2021, 2022 was something called Sphere Finance. It was during the era of like the OHM 101,000 APY, super unsustainable, auto I forget what it was called, but it was like auto rebalancing or auto, like it just kept staking. And so if I just didn't check on it for 7 days, all of a sudden I came back to earning a crazy load of money or a crazy load of tokens every single day, which I can then turn and sell that right away. So that's how we define Ponzinomics: reward systems that rely on new players entering to sustain the old ones. Because if you enter in early, for a small amount of investment, you're printing quite a lot of tokens that then, if the price goes up, you all of a sudden, with a $500 investment, have hundreds of thousands of dollars, as some examples have been happening. All right, let's see what we got so far. A game is a game. Time Wonderland. Oh, Arshmello. Time Wonderland was insane. That's actually around the time that I entered crypto. Time Wonderland, Rome, OHM, Sphere Finance, all them goods. Titano. Anyone who knows back in the day in DeFi, that was like the highlight of like my first couple months in crypto. That's what hooked me in. I came in through the Ponzinomics and I stayed for the tech and the sustainability is how I'll put it. So the key question that we're gonna ask about here today, if you think about where we were a couple years ago with those projects, how can we go ahead and take all those things? Because at the end of the day, the Ponzinomics attracts people. The idea of, hey, I'm just gonna put in $500, or I'm gonna put in $100, and I'm gonna be printing $50 every day. That's a really strong hook, and that's why it continues to work. even all these years later, despite how many failed attempts, how many failed projects we have seen, how many graveyards are filled with these projects that are just not sustainable and implode on themselves. Somehow, new projects with that same sort of reward model still come in, still come out, and people continue to participate. Because there is something to be said about that dream of like, hey, if I just put in that little bit, I will get a lot of it back. So the key question we're going to be asking here today is what makes an economy sustainable? And more importantly, can a DeFi game ever achieve that? I'm going to take a little break here to read the chat a little bit, catch us up. Cop game, Wolf game. Yep. Oh, Cop game was a big one. Wolf. I didn't see Wolf game. I was still
I lost like
transitioning.
3K on Cop Game.
Oh no. Yeah, Wolf game was before my time in the sense of like I wasn't looking at games back then. It was just more DeFi stuff. But Cop game I definitely dabbled into it a little bit. I think I came out like barely even or just a little bit above profit.
Which one were you on though? Because I was on the one in Solana, and that one was like they did their season one, and they
It was one
completely
on
botched the
Polygon.
mint.
It was like a cop. It
Yeah,
was like
no,
a cop versus
this one was
robbers
on
or something like
Solana.
that.
Yeah, that's what it was. You get a cop and you can capture robbers, or you get the robbers and you can. Yeah, it was not terrible in like ideation, but they couldn't code to save their lives, and yeah.
Yeah, yeah. I mean, damn,
What's
we've
up,
been
Andy?
through so many things. We see
I know.
Marshmallow
And now
saying
they're
never
just
invest in a
designed with
project.
better graphics, realistically.
Yep. And I think what Marshmallow says is very true. Never invest in a project with a reward card calculator on their website. Oh man, but that sold you the dream. I mean, that's the beautiful part and the scary part of Ponzi-nomic style projects. They sell you the dream. All you put in is like, oh my god, if this just sustains for 6 months, I'm gonna have how many Lambos? How many houses am I gonna be able to buy? Like that's a hook that is hard to beat and hard to ignore for a lot of people. I should be having 10 Lambos by now. Agreed, man. I should be having multiple mansions by now if some of these had sustained. All right, but yes, that's the goal. So like we all know the hook. We've all been part of the hook. We've all seen it. We've all fallen for it. We've all participated in some way or another. But can we somehow take that initial unsustainable economy and turn it to something sustainable? That is a question that we've all been asking ourselves, and a question that the specific project that we're looking at today says they have a potential answer for. And I think instead of, and just so you guys know, I'm not like heavily invested in it. I've played around with Addicted.fun. I, bought a little farm, but nothing crazy. I have learned my lesson. I do not go into any of these things with size unless I know I'm one of the first ones in, because that's the only way you really win here. And I wasn't one of the first ones in. So I don't have, if this game, explodes, I'm not gonna be too sad. But if this game is becomes sustainable, I'm gonna be really happy in the sense of like, well, now we have a blueprint for something potential. So that's the key question that we're looking at. And as we mentioned, we're gonna be specifically looking at this project called Addicted.fun. It's on Solana. This is the overview. What is it? It's a weed farming simulation inspired by Bitcoin mining. It also was a shock to see. You don't really see a lot of projects, especially that are trying to become legitimate, focus on such a touchy subject like a weed farm. But hey, they somehow made it happen, and they say that they were inspired by Bitcoin mining. Let's look at the core mechanics of the game. It's built fully on chain, and the chain is Solana. Players earn weed by farming. So the first thing that you got to do, and I believe they haven't changed it since, is you need to spend zero point 0.5 Sol to open up a farm, and then you start earning weed every day, proportional to your grow power. And the grow power is very proportional or very like cash power in regular Bitcoin mining. So the more grow power you have, the more you upgrade your farm, the more weed you make per day. But the interesting part is that this is all capped. So they have, if for today, there's only going to be 1 million weed minted. That 1 million weed is not changing this if there's only 10 players or if there's 1 million players. That 1 million weed is all there's going to be. And then you decide your share based on how much grow power you have. And just like Bitcoin, when nobody was mining Bitcoin, the 10 people that were getting thousands of Bitcoin per day. Nowadays, everyone that's trying to mine Bitcoin is fighting for scraps because there's not that many to go around. And then, the halvings happen, meaning that the rewards go down significantly. And then it also works like that. So each block distributes weed rewards to all the farms based on their share ratio. So if you own 5% of all the grow power in existence, every time a block happens and it distributes weed, you get 5% of that distribution. But they gamified it a little bit more, and this is where it becomes a game a little bit, is by the mystery seed packs. And you buy those with the weed token, and that is their main sync and reward RNG loop. At least for now. They have other stuff that's coming in season 2, but for season 1, the initial thing, all you could do with your weed is either sell it or buy mystery seed packs, which would give you the potential to find some seeds that would boost your grow power tremendously. And so, if you happen to hit one of those super legendary ones, that was the loop. Like, hey, spend instead of selling your weed, how about you spend it, buy some packs, and maybe you pull something super rare. Which, if you spend $10 and you have the potential of getting $5,000 worth of power, well, that's how you see a lot of people started buying mystery packs. And so that was the initial. This is the initial utility and the main sync of the game. But as you guys can tell, like if the token started at a penny and all of a sudden it shoots to $1, these mystery packs became quite expensive. That's one of the other things that these Ponzonomic things, the main syncs, need to be able to adapt to the growing demand if they want to go ahead and make it inclusive to anyone who wants to come in. Farm upgrades, in at least in this version, upgrade unlocks better drops, efficiency, and rarity access, and every in-game purchase burns weed, becoming a deflationary system. So just right here, you'll already see some of like the things that they've tried to. If you compare it to like Titano, Sphere, Time Wonderland, you can see that this is a more advanced game loop than, hey, just buy the token, print forever, and hope that more people keep buying in. This is like, hey, we still have that, but now we're also cutting down the rewards every, I believe it's 7 days. We're going to have the rewards just like the Bitcoin halving, but also we're going to give you syncs, and we're going to give you syncs right out the bat. So instead of like a lot of other projects and games that they promise to have syncs down the future to make it sustainable, this project actually came out the gate saying, hey, if you don't want to just have to sell every single day, we're going to give you mystery packs, farm upgrades, where you can go ahead and spend these and actually burn the token. And deflationary systems is also something we're probably all very aware of and have seen all around the place. Deflationary systems is another thing that people love to sell as like a big thing, a big deal. But a lot of times it doesn't actually affect the price as much as they claim. And then the key hook is Addicted reimagines. So this is how they sell it on their website and like on some of their tweets. Addicted reimagines Bitcoin mining as on-chain farming. So now instead of you actually having to have a super powerhouse full of miners and graphics cards that are mining all day, you just buy a couple farms, and all of a sudden you have the same on-chain farming power that you would if you had a Bitcoin farm. All right, we see. I heard about it, but I was afraid to play it. Well, yeah. If so, it depends on when you heard about it. That's the other part. Anytime you hear about anything that has Ponzonomics, check the price first. Check the price action. If you see a straight up green candle, and I can pull that up actually right now to show a little bit. Let me see if it actually shows on here, or if I need to change how I share my screen. Change stream. Oh, entire screen. Boom. So this is what the chart looks like. Let me just start zooming out. Boom. Who recognizes this kind of chart? What kind of memories is being brought back right here? But look at this. So I know people who entered around these prices, the 1 million, but man, overnight. And this is why I say, whenever you hear of any opportunity, be careful when you enter, because this shot up from like 1 million to overnight. This is September 30th. This is when people started being able to get in. September 31st. Look, we're not even September 31st, or I guess there's no September 31st. October 1st. Overnight, it's 80 million. This was crazy. Anyone who was able to enter here, I know of people. I'm not one of those people, or else I'd be a lot happier right now, that made 6 figures in this just insane push that Solana just saw an explosion overnight. But then if you were asleep, as I was, you came back to a different look at 6 a.m. in the morning. It was no longer at 78 million. It was now half, like a quarter of that, at 20 to 30 million. And as you can see, as people have been waiting for the deflationary and the sustainable economics, the chart has been going slowly down as most Ponzonomic tokens and projects go. So this is where now we look at the inflection point of like, okay, this is how most of us know the charts as Ponzonomics. Like this, when we look at this kind of project, we know, okay, yeah, it was unsustainable. But can they turn it around? That's the big question that we're asking here, because this is not just about Addicted.fun, but it's about any sustainability that comes into the industry. This is more of a conversation about crypto in general. At the end of the day, we're trying to find a sustainable reward economy, a system that can incentivize people to stay, play these games, participate in these protocols, be an active community member, have incentives to do so, but at the same time be sustainable enough that people aren't just printing money forever, and then when they stop printing that money, they move on to something different. Emmy asks, "What's your position now in weed?" Oh, I have less than a couple $100. I'll tell you that, and I did very minimal things because when I entered, it was like somewhere around here, and then it became very expensive to do any upgrades, and I said, nope, I'm not falling for that. I'm not falling for this trap anymore, not again. So I don't have as much exposure as some other people in the ecosystem do, and I'm sad about it in the sense of like I could have made a lot more, but I'm also happy about it where I could have lost a lot more if I fell for the trap once again. So this is not financial advice. This is not saying, oh look, this is at a good price. None of that. No, this is more of like, let's look at it from the fundamentals perspective of like, okay, we all know that this is how Ponzinomic projects go and look like, but can it be turned around through sustainable systems? And then we go here, the unsustainable loop and why the original model risk collapsing. So some of the problems that we see and that Risk.fun is seeing right now. Archmellow, when did I get in? Around 2 million, and so I made a good little trade, but I didn't go in with size. So I didn't go in with a lot to be like, oh my god, this was like an amazing trade, because when you go in with a little bit, like you don't make a lot of it back. There's another question. Let me use the $100 for giveaways so we can invest in the Wii. Hey, yeah, a win is a win, so I'm happy. Hey, when you don't lose money in these kind of projects, you can't be anything but happy. Um, but let's look at the unsustainable loop, and this is the problem that they're having that everyone is aware of, but that they're trying to fix. So the problems that they see is that top whales kept compounding their grow power, and when smaller players get diluted. So if I'm a whale and I entered at a good price, if I would have gone in with size, if I would have gone in with thousands of dollars at the $1-2 million price point, I would have been able to compound my farm to start taking some of that share away from everyone else. Just like how we do in Bitcoin, whoever has the biggest farm has the biggest chance for the bigger rewards because they have more hash power compared to others. So that's exactly what happened here. Top players, top whales sold a chunk of it at the top, as most people should, but they also compounded a lot to now, when as the price keeps coming down, smaller players who don't have the capital to compound their farms or upgrade their farms, the whales can, because they have the most hash power. So every time more wheat gets printed, they get majority of that, and that is how they create small players being diluted. And when you have a game where the whales control everything, and people like, and I say people like me, people like us who don't have millions of dollars or hundreds of thousands of dollars to throw at a project, like we become diluted. I know a lot of people. I myself am earning a fraction of what I was earning day one, and that's how most of these things go. The rewards per player drops fast as total grow power expanded. Like I mentioned in the last slide, if 10 people are playing, that pie is shared between 10 people respective to where their grow power. But now if you take that exact same pie that's shrinking over time because the halving is happening every 7 days, all of a sudden you have a small pie split around hundreds of thousands of people. And they've gotten hundreds of thousands of people to play this game. So that's where the rewards, that's why people are starting to see like, well, there's no point in even trying to invest in this game because I'm not going to be earning anything. Might as well just sell every chance I get, leading to the chart that we just saw right now. having schedule every 7 days made early players dominant. If you got in first day or the first like 20, like first 12 hours, because it just exploded. There was no first 24 hours, first week. If you got into the first 12 hours and you went in with size, you are in a very significant place where not many people can catch up. So that's where they're at right now. And the results of that is imbalance, short term FOMO, and unsustainable returns. And we saw the flywheel of unsustainability. Players buy seeds, they use weed to buy more seeds, and then they earn weed. And then supposedly they're supposed to be buying more seeds, use more weed. So this is the flywheel of how it's supposed to be. But this is unsustainable just because as they earn weed, they actually aren't buying it, they're selling it instead. Right. But all right, let me look through these questions. But it's in a really zone to accumulate more. What do you think? It's and that's why I said not financial advice. Don't take the chart to see like, oh, this is a good opportunity. It's more of like I would see it from a fundamentals philosophical point of view of like this is what they're gonna do to fix it, and then see if they actually fixes it. It's not saying that they will and like a guarantee that it will happen. It's more of like we're in a really good spot because we see this project following the footpaths of all other Punzonomics, but they're going to try something different. And the conversation is more of like, can that sustainability actually make a difference? And so, in 2 weeks when I come back for another one of these, like we'll be able to look back and be like, okay, it's been 2 weeks. Season two hopefully has been had a couple days or like a week to really kick off some of these things. How is it looking? Do they
Where are they
specify?
getting $100 from? What you giving? You doing a special giveaway, Caesar?
I don't know. I thought maybe you announced something that I was aware.
I'm trying to figure it out myself. I'm like, wait, what? He's like, Caesar says it. Caesar says it. Jeez. No, like I mean, we can always do a contest around trading or something at some point, like live trading. But you guys would be risking your own money, and the rewards might not be worth the risk. You know what I'm saying? Like this would just be something that if you guys are participating in trades normally, it's something that we could potentially put up and give you guys a chance, or we can do it based on certain assets, maybe related to some of the marketing clients, depending on how we go down the line. I'm it would be high risk if we did something like that. So I would increase the rewards a little bit, but you got to remember, we're not responsible for any losses that you may incur trading because it's on you to trade wisely, right? Even if we have a specific asset that we're asking you to trade, right? So just remember that, guys, and we can always cover that another time because he's talking about um, you know, addicted.fun and sustainability at the moment.
Yeah, Crip had a question about do they specify their long term? So yes. So the team and like here I have like some quotes from tweets that they actually made. They have some docs and they have like the overall idea, and one of their original theses is let's take an unsustainable model and make it sustainable. Like that's always been at least how they explained it in their documents and in their tweets. That's their goal. They understand that this is unsustainable because they can't just be printing, weed forever, and they can't be giving people, thousands and thousands of dollars every day without it impacting the token price and then imploding on itself. So they do specify that they want to be long term, but they realize that a Ponzi-nomic style of gameplay loop attracts people like nothing else. So that's how they used it, and that's why it's such an interesting approach from a philosophical point of view. Use the unsustainable reward mechanics to hook people in, get people invested, and then turn on the sustainable mechanics to try to keep the game loop going for as long as possible. And that's the question that we're asking today. Will it work or will it not? And because at the end of the day, if they can make something like this work, it's something that people can then take inspiration from and other things will spin out of it. At the end of the day, I view a lot of crypto, gaming, Web3, DeFi, a lot of this stuff is experiments. No one has the right answer to say, hey, this will always work. Besides like Bitcoin and ETH and like a few other tokens that have found a very niche specific use case that will make them sustainable long term. But when we're talking about DeFi projects, when we're talking about degen stuff, when we're talking about games and like memes, like these are all experiments that we hope to work. And so that's how I'm looking at it and approaching this this stuff today. Like, hey, in theory, can this actually become something that can work? How's the Powerball project doing? I am not sure about the Powerball project, but if it's something that you're trying to do more research on, and I was gonna explain a little bit of that about that at the end. Like, I want to also, me and Terrence were talking about this yesterday, but we would love to take these to the moon events, and instead of me just coming in and telling, like, having a presentation for you guys every single week, maybe some of these can be like, hey, let's do a show and tell kind of style event where you guys bring a project that you guys want to do a deep dive in. We look at it. We all look at it together. We all look at the tokenomics of it. We look at their white paper. We look at their documents, and then we try to decide, hey, what stuff about this project is like a green flag? Where are some orange flags? Where are some red flags? And like, is this something that would be a potentially decent investment? We could do that as well because I want to, at the end of the day, like, to the moon events is to help you guys become better traders, become better investors, become better speculators, and be able to do your own research and feel like, hey, when I look at a new project, I know what things to look for and what things should be standing out to me as good things and bad things. And then let me just catch up with all the questions. I have a question. Make me a millionaire, Arshmallow. I would love to make all you guys millionaires, dude. That's a beautiful part of crypto. Like, it's, yes, there's some PvP aspects to it, but if we can all get richer together, that's the beautiful part. How does Addicted.fund plan to transition from its early Ponzonomic reward structures to a truly sustainable DeFi economy in season 2? Great question. We're going to be looking at that right now. And then, so this is the unsustainable loop. These are the problems that they're having, and this is what it's resulting, and it impacts the price, as you guys see, is just going down, down, down. And even they say it. Top dealers kept buying packs, smaller players seeing rewards shrink. So how are they going to shift into sustainability? This is the important part of the theory. Season 2, how Addicted is evolving beyond Ponzinomics. The new sustainability levers that they plan to implement is what they call PvP/Warzone, and they have very limited amount of information because they're keeping it close to the chest. They don't want anyone to try to figure out or game it ahead of time. They want everyone to have an equal opportunity to participate and to learn the information all at once. And it should be coming soon. They were supposed to have a stream with Solana today to talk about some of these things, but because it's supposed to happen today and it didn't happen before I can prepare this slideshow for everyone, I still don't know all the information, but this is what I know so far. So PvP and Warzone will introduce skill and strategy based gameplay. So raids, stealing farms. It was going to redistribute wealth from the inactive and or dominant players to more of a dynamic balance. It will add risk and defense mechanisms instead of passive compounding. All right, so as we just mentioned, one of the biggest problems with Ponzi projects is that, hey, I can just check in out in it a couple times a day, click claim, and then sell the tokens. I don't have to do anything. It doesn't require a lot of brain power. It doesn't require a lot of time. I just got in early. I'm farming. I'm printing. I sell. What they're gonna do with PvP and Warzone, it says, nope, that's all going away. If there's a whale that's just printing and selling but not being active at all, or just someone that's just not checking in every single day or being inactive, now smaller players or big players or just any players in general can go ahead and conduct raids, steal from farms. So now all of a sudden, if you think about my farm, I have a little farm. So if a big whale with a lot of, we'll talk about weapons and everything, but if a big whale and a bunch of their homies decide to come after me and they say, hey, I'm going to take Caesar's farm, I'm going to take Caesar's plants, and I don't have any protection, I don't gang up with some other people, like, I'm just going to get kind of screwed, they're going to come in and take my stuff, and there's not much I can do about it if I don't align with other cartels or communities. So now, but on the flip side, now if a bunch of little people or a bunch of people with little farms see this opportunity, we're like, hey, there's like 10,000 of us with a little farm. Why don't we just all come together as a CJF community and say, hey, we're gonna go after all the whales that are just selling on us and dumping on us. We're gonna go take their farms. We're gonna go take their plants and we're gonna go take their rewards. And so that's where, like, the fun aspect of this comes from, and it goes away from just a passive enact just like passive compounding and passive income to now it's introduces skill and strategy because you have to work with others. So you have to prepare yourself to go out and try to steal some of that grow power from others. And with the PvP and Warzone, it also introduces cartels and communities. Cooperative play allows smaller players to form alliances. So, like I said, if there's like 500 of us with a small farm, well, hey, 500 of us together is probably stronger than one medium farm. And it shifts the economy from individual whales to group coordination. Now, there's still some question of like, hey, what if like the top 15 whales decide to all gang up and then just take over everything? Like there still has to be some answers to these questions, and that's why I'm excited to see what they release in the next 2 weeks. But that's the idea. Let's give the small farms a chance to compete against bigger farms that are just being passive about their gameplay, and give others a chance to take some of that away, like a Robin Hood kind of scenario. Take some money from the rich and distribute it back to the people who have less. And then it also adds a social layer, adds retention and replayability. Now, if you feel like you're part of something bigger, you feel like you're part of a community, you have responsibilities inside this game, that adds retention, that gets people coming back and checking out the game and playing it more and being more active. Or if they don't, they risk the chance of getting their stuff taken away. So, this is where they're also going to introduce weapons and upgrades. And there's going to be more token sinks, right? More burn mechanisms, and that should stabilize, or the hope is that it stabilizes the weed supply. If they're cutting down how much weed is being printed every single week by the 7-day hash rate or the halving, now you have two things. You have less weed being printed every single week, but also you have more weed being burned as people try to get weapons and upgrades. Because if they don't have weapon and upgrades, now they run getting hit by the mob. And if they don't, if they want to participate in, instead of being hit by the mob, to go ahead and be part of the mob, they have to participate in these new token sinks. So it's an interesting adaptation of like, hey, let's re-engage players who maybe are just printing and selling every single day and give them a reason to care more about this. It adds utility and status-based progression beyond farming. As we mentioned, it just adds another layer of like, hey, I can come in, be more active, and maybe if I missed the first week of gameplay and I'm coming in today or coming in tomorrow into this game, and I just see like, dang, I can't compete with the whales. These mechanics should give that opportunity to the new player to feel not like they're coming in to sustain the Ponzonomics of the people who got in early, but instead have the opportunity to come in and take that power away from people who were there early. And they're also going to introduce this thing called dynamic seasons, which will have soft resets between seasons, and it will reduce the infinite compounding. So we don't know exactly what the details look like, but a few people who are prominent in the space and have like been playing this since day one and a lot more knowledgeable than me are saying that this would look something like maybe weapons only last for a season, or certain upgrades become downgraded if they're not maintained, or like there's some sort of durability to your weapons, something like that, that makes it like, hey, you don't just buy a weapon once and have it forever. Maybe you run out of bullets, maybe you run out of ammo, maybe you run like your machete becomes dull, things like that. There's going to be certain things that introduces more sinks, and people having to reactivate these things to keep the economy fresh and balanced, sort of like modern day life service games. And Addicted Off On actually talks about this when they said top dealers lose their monopoly, cartels and communities rise. So take a quick little break here and look at the is weed a utility project? I wouldn't say it's a utility project, because when I think of utility projects, I think, okay, like helium. I buy helium tokens. I use those tokens to pay for my monthly mobile plan for my phone. That's what I think of a utility token. Like, okay, I'm gonna use that token for something to pay my bills. This is more of like a gamified economic game is what I would classify this at. I was thinking we were going to talk about sustainability as a whole crypto space. So, we're I'm trying to like do a balance of both. I think we're looking at Addicted.fun as an example of the overall theory. There is a sustainability issue in crypto, but I'm looking at this as a specific example of how can that be changed. Like how can we go ahead and take something that we all know is not sustainable as a Ponzi project that we've all are aware of, but how can that potentially be turned to something sustainable? Because then things like this, what I'm looking at it is like these sustainability mechanisms, if they work well, and this is proven to work, it's not so much about the success of Addicted.fun as a project. It's more of like seeing this as a proof of concept for other projects to go ahead and say like, okay, well, if they were able to do it, let's see how we can spin that up into our own game or our own protocol, because this goes way beyond a game. This can be into a DeFi protocol. If I go ahead and have some sort of reward structure that I give out to people who participate in my protocol, well, maybe I can implement some of these things, call it different things. Don't call it cartels, don't call it PvP, don't call it communities, but these things can be implemented in many different ways. So we're looking at it sustainability from an overall perspective by looking at a specific example and how they're approaching it. The young prof says, in what ways does Addicted.fund's weed burning model differ from typical DeFi sinks, and how effective has it been in reducing inflation so far? It hasn't. Be just being honest, it hasn't. And I think that's where I warn people of thinking, just because you see one of the projects that you're trying to invest in or talk about or like look into, say, hey, we have deflationary economy, that means nothing. That doesn't mean anything if it's not put in properly. Because if they're printing $1 million and then they're burning $10,000, they're still printing a whole lot more than they're burning. So deflationary burning mechanisms, all those buzzwords, don't necessarily mean anything in itself. It's more about the application of it. And this specific project hasn't had the lifespan to really see those mechanisms come to fruition. So it's still more of just like a promise in the future than something that is seeing an effect right now in their chart. And then how much percentage of your bag do you play in Ponzi? Oh, very small percentage. Like, and the reason why I call it Ponzinomics is because like underneath the layer, that's what it is, regardless if a project wants to admit it or not. And that's why we started the event defining Ponzinomics, because Ponzinomics sounds like a horrible word, and a lot of people take offense to it when you call their project a Ponzinomics game. But that's why defining what it is so important, because even if they tell you it's not, you can be like, yes, it is. And it's Ponzinomics just means reward systems that rely on new players entering to sustain the old ones. If you're printing so much token, if you continue printing so much of this asset that people just continue selling, and the only way to keep the price stable is new people coming in to buy, that's a Ponzi. That's not just in crypto, that's in regular stuff. Like there's a lot of Ponzi companies that get shut down in regular life because they have this kind of mechanism. And but to answer your question, Marshmallow, it's like 2% of my entire portfolio goes into games like this, because it's more of like you got to know that that money could be gone in like an hour. That money could implode, but you can go to sleep, come back, and see that that project's completely off the face of the earth. You shouldn't put anything significant into these projects, because that could just be gone instantly. It's it's more of a gamble, but that's why the conversation today is like, can we turn the quote unquote gamble to something that actually has potential to be sustainable? And that's why the conversation is about sustainability while looking at this specific example. Network has been horrible. I have a whole lot of questions. Yeah. Benz, feel free to throw all the questions that you have. How can smaller players remain competitive in an ecosystem where early whales have significantly higher power? That's where their season two is supposedly going to fix that, and we'll see. In 2 weeks when we come back for another one of these, we'll be able to look like, hey, sustainability part two, did it actually work, or is it working? Because at the end of the day, hopefully the game is not dead by then, and they're working through these things. Because I'm looking at this, like I mentioned again, I'm looking at this more as an overall example to the problem than the solution to this specific project. And to answer your question, the young prof, these are the things that should be solving it. More introducing skill and strategy based gameplay rather than just passive compounding, making people actually play the game rather than just printing. And then looking at addicted.fun, could you share one concrete example? The question just disappeared from my screen. I was reading it and then it just disappeared. All right. The young prof also asks, do you believe DeFi based games can ever achieve true economic sustainability without relying on continuous new player inflow? And how is addicted.fun addressing this challenge? Short answer, yes. I hope so. Because if they do, then that means that there's something legitimate coming out of this space. And this isn't just about DeFi games. This is just crypto in general. Because, like I mentioned, this isn't just about Addicted.fun or this specific game. It's about the ideologies and theories behind how they're building the economy to try to solve an unsustainable problem. So, yes, I hope so. Because if we all, if my answer was no, like I don't think there'll ever be a solution, then what the heck am I doing in this space? You know, if I think that this is all going to continue being Ponzonomics, then I'm just being in a space that I don't truly believe in. I believe in the tech. I believe in the potential future to have something sustainable. And like I mentioned at the start of this, these are all experiments. These are all, trial and errors type of things that, hey, maybe if addicted.fun doesn't fix the problem, but it gets us one step closer, the next project comes in and takes us one step closer. Because I mean, if we look at it, how we began the event today, we talked about, Time Wonderland, we talked about Ohm, we talked about Rome, we talked about Sphere, we talked about all these things that were super unsustainable 4 years ago. But now look, we're 4 years later where we're still at and how we're still trying to solve the same problems. Looking at addicted.fun, could you share one concrete example of a mechanic you are implementing to directly combat Ponzonomics trap? That I'm implementing, I'm not implementing. Well, the thing that I'm implementing is not going into these projects with size. And what I mean by that is like if I would normally put in $1,000 into a project that I'm investing, I'm putting 100 into this. I'm putting $50 into this because I have to understand that 50 or $100 might be gone tomorrow. So it's something that I'm willing to be okay with losing overnight. And that's how you should approach anything that's unsustainable like this. Like, hey, if it goes well, like if we go back to the chart, um, if it goes well, if I would have gone in with a couple $1,000s here, I would have made six figures. I would have been coming into this like, oh my god, this is the best thing since bread. I made $100,000. This is awesome. But if I would have put in a 100,000 here, I would be, this shit's crazy. This is a scam. I've been robbed because I lost $100,000. It's all about entries. It's all about timings. But the overall thing is like, the question still relies like, can it be more than that? Can it be more than just, hey, I got in early so I win, or hey, I got in late so I lose? And that's the question that I think we're trying to answer today. Can we get towards that scenario? Because that's true about any project. Think about someone that's buying Bitcoin today. 120,000, or I think it's less than 120. But if I'm buying a Bitcoin at $125,000 today, and tomorrow we go into a bear market, and Bitcoin is at $60,000, I'm gonna think crypto is a scam. I'm gonna think that Bitcoin is crazy, and that all these governments are lying to me, and that the U.S. is just a trap because they sold me that Bitcoin was something gonna be awesome, and all of a sudden I lost 50% of my money, especially for people that are putting in their retirement funds, right? It's all, and that's where the question comes in about sustainability. Like, can we actually turn it from, instead of being timing the market and timing when you enter a project, to instead of time in the market, can we just make it like, hey, even if I came in at 120,000 Bitcoin, can I go ahead and still be winning? Like, can I still feel comfortable that I'm going to win in the long term if Bitcoin hits $1 million or $2 million as people project in the next 10 years or so? That's the goal of like where I think crypto needs to get to. It's not so much like, oh my god, I timed the bottom, or oh my god, I shorted the top. And instead of like, hey, I actually believe in something that's going to be worth more in the future. And all right, let's see. I have two about this season two. The young prof, that didn't make some more sense to me. I have two about the season two, and then how does the introduction of PvP mechanisms, Chris asks, dynamic seasons, token burns mechanism, and addicted season 2 contribute to creating a more sustainable and balanced in-game economy beyond traditional Ponzonomics? We answered that question a couple of times here, but it's the idea of removing the passive income to, hey, you have to be an active participant of this ecosystem to continue earning the rewards that you want. So the thing is that they're not moving away from like, hey, you have the potential to earn a lot, but now instead of just earning a lot by being early, you would be earning a lot by being an active participant, and a well skilled player of this ecosystem. One thing I've noticed is that short term profits still outweigh long term responsibility in most industries. That crib, that's a bar. You're spitting you're spitting some crazy stuff here because that is true. That is still very true, and it's still true today as it was a couple years ago. Timing the market is still way far outweighs time in market most of the time. There are certain examples like Bitcoin. If you would have bought in 5 years ago and just held or just continued DCing in, you would still be winning someone that winning, beating most people that time the market perfectly. But in most cases, timing the market still is better than time in the market. Because if you would have timed in this specific project, you would be winning a lot more than someone that just held through the pains. I see Terrace
I have
you
to
unmuted.
say, I had to say, one of the biggest things with crypto right now is getting in early, being there when they're pushing the hype, because that's usually when the biggest earnings are. But it's also the highest risk point because there's no proven track record for this company. The project founders are likely new to the space or new to founding a company or building out a game or building out a project. So there's a huge amount of risk in getting in early, but that also depends, because if you get in early and you say toss in $100, something that you're willing to lose, and you have the potential to 10x or 100x that gain based on being early enough in it, then it's potentially worth it. But realistically, it's a huge amount of risk for a very high potential that you're either going to hold too long, or that you got in like 10 minutes too late and it's going to dump now. So unless you're there when it's first launching, in a lot of cases with the Ponzinomics kind of style of what crypto's become in a lot of ways and been in the history, you have to be there early. Now, I see another aspect to this. I see that we could do things that are sustainable and long term and have small emissions over time. The whole problem with those is that they don't get the hype and attention and initial investment in the beginning
Yeah.
that most companies are looking for. So they're looking for quick gains and short shelf life compared to long-term shelf life and sustainable gains over time with sustainable emissions to people participating. That's what I'm looking more towards in the future for crypto. I'm looking more for like projects that are going to do things in a more sustainable way. Maybe not the big push for the big rewards and everything in the beginning, but being able to be revenue positive so that they can sustain their business at the same time as providing value back to people who get in and participate in their ecosystem. So we're yet to see it yet, but I'm hopeful.
Yeah, and that's the hope. And I think that's why I'm looking at this in a theoretical sense. Like this is such an interesting approach because they're hooking you in. Like Tara said, the sustainable things are out there. There's sustainable examples of things that are just like, hey, you put in $1,000, you'll get $10,000 back over 10, 20 years. Like that exists. Like there's things out there that you can go and just put in your $1,000 and earn 5% or 10% or like a couple percent over time and feel like your money is safe. You're not going to lose it, but you're also not earning much back. And that technically is sustainable. But the thing is that in crypto, we've become so accustomed to like, well, that's not very exciting. That doesn't sound like a lot of fun. At the end of the day, most of us, and I myself included, are still trying to become financially free, become financially sustainable, and but financially free from having to do like jobs and just live off the stuff that I've made in terms of my investments. And that's where these hooks are so important because you're like, well, if I just keep throwing $50 at the wall and something happens to flip, and I've had these kind of wins. I have examples of like I put in $50, turned it to $10,000, and awesome. But I also have a lot of examples where I've thrown $50 at something and it's gone, it's gone, and like it's more of like a numbers game of like, well, with things like this, like you hope that one hits. But the reason why we're looking at this specific example is because it's an interesting theoretical approach of like let's hook people in by the unsustainable rewards, but let's keep people around and let's make this something that, because they made a lot of money. You have to also think about from the perspective of like why a project wants to start super unsustainable. The amount of fees that they made, the amount of money that they made from this initial part is insane. You can be all sustainable all you want and like you can push for that from the get-go, but then you don't have these numbers. Like even if their token is now at under 4 cents, the amount of money that they made in this initial push from the burning, the buybacks and everything that they earned from the fees is insane. With like now they have millions of dollars that they can say, okay, well, we can figure out, we can continue trying things and still be
Now we can shut
revenue
down.
positive. Well, so this team is actually not new.
I had to. I had to.
Well, hopefully not, but because this team is actually not new. This is the team behind another protocol that maybe you guys have heard back in a couple months ago called Infected.fun. There was like another big one where it's like you're trying to make the biggest virus and infect as many people as possible. I didn't get into that one, but like I knew that team and like they also became, that was also a very profitable venture and it still is because it's still around. So this is a team that is interesting to look at in more of like not the specific product itself, but the economic experiments that they're trying. That's the important part that I'm trying to take away here is like, are these experiments teaching us something, or like can we take something away from these experiments about sustainability? Because they also have like this is one of the teams that I've seen try different things and try new mechanics that has made them a lot of money from a project founder perspective. And you know, where we see a lot of money not being brought into the ecosystem, especially when it comes to gaming, you still see that there is still a very big desire for anything gamified. Just something that, you know, people feel like they if they're not going to be having a lot of fun because the games suck, they're at least going to be making a good amount of money because there's an incentive model for it. But we spend a lot of this time on this. I think I have a couple more slides. Yeah, I have one more slide here, and we're about to reach the hour. So the lessons for traders and builders. So a lot of this stuff we've talked about over the hour, from the questions that everyone's been asking, the engagement and the back and forth that we've had. But how does this actually, like, how now we take away from like, okay, forget infected.fun in this specific example, but what lessons are here that we can take in terms of overall trading? So the big thing is that sustainability is the new alpha and has been the new alpha for a while now. The push is still, I said, Terrace even mentioned like we're trying to inch towards sustainability. We're trying to inch to sustainable reward models. We're trying to inch to something that isn't going to be gone in a month, isn't going to be gone in 6 months. These projects shouldn't be shutting down in less than a year. We want to see projects and teams build something for 5 plus years. If a project lives 5 years, dude, the likelihood of a project or a company surviving 5 years in the regular world outside of crypto, it's like a very small percentage. Something like 95+ percent of companies that start don't make it to the 5 year mark because it's just that brutal to build a company. And it's even more brutal when it comes to crypto because of these hyperinflationary, hyper unsustainable economic models that have been so far. These things don't make, most of these games, most of these things, even if they try to survive longer than they do, they're not around for more than a year. They're not around for, and the ones that are, they're not around in any meaningful way that's like, oh yeah, that's a profitable company. It's more of like, hey, they made a lot of money in the beginning, now they're slowly fading away over a couple years. So where can we
There's
actually
even
take?
an argument now, though, like they're discussing now actively with like the big heads in the crypto space that more and more on whether or not a project has to run indefinitely. If there should be a shelf life on these, like an expectation on, product lifespan, and whether or not these big hype, like tokenomics, Ponzi-nomic games should have an expectation to be able to run forever, or if they should be designed for a short lifespan, sort of like flare up and fizzle out, and people that were able to earn can earn, and people that weren't were unlucky and didn't
Yeah,
get to participate. Like some, like realistically 6 months is a long time for a project like Addicted.fun.
yeah,
um
three
yeah,
months is
and
long.
Exactly. Usually, most people make the bulk of their earnings in the first week. And then after that, they hope that they continue to get people to come in and participate in the ecosystem. And maybe what'll end up happening is a lot of people end up taking their profits out and let what they have in ride as it goes, and just try to get the emissions as they go. But without people coming in, at some point the project just shuts down.
Yeah, yeah, and I think that's why, like, it's such. That's why today, like, and I know a couple people were like, "Oh, well, he must have like some sort of investment in this that like he wants to talk about this specific project," but it's really not that. Like, to me, it's more of like the like the actual systems that they're trying to put into place, and like how can that affect the overall, because at the end of the day, a project like this that captured so much of the attention of crypto in short amount of time, now people are putting eyes into this. Now other projects are like, hey, what did they do right? Because in a time where not a lot of games, and I say games with quotations, not a lot of games are getting funding, and a lot of games are getting revenue, they they pulled up millions. And yes, you could say like, well, yes, is the Ponzonomics and everything, but at the end of the day, this game on Solana was able to make millions where others are dying. And so there's definitely lessons there to be learned. And now the question is, can those lessons be translated to something longer term? Because at the end of the day, as you know, Tanner just mentioned, like a lot of these things, surviving for 6 months is already a huge accomplishment and a milestone. But can we change that over time to be the norm instead of the exception? Ben's asked, do you believe regulatory frameworks will eventually force DeFi games to adopt more sustainable models? Unfortunately, yes. And I believe that I'm like 50, I'm like on the fence about regulatory frameworks and regulations coming into the space. Because on one hand, it stops scams from being rampant in the space, but on the other hand, it also stops innovation. Um, when you have regulations telling you, hey, you can't build something like this, well, then we don't have these kind of experiments. And I'm all for like allowing people to do what they want with their money however they want. If I'm a grown ass man, if I have $100 and I'm throwing $100 at something that's a gamble, that's my $100 to lose. If I put my money in a slot machine, that's me saying I'm willing to lose that slot machine. And this is just completely different. That's just my point on like government, uh, governments, trying to tell you what to do with your money and what you can't do. But yes, I think regulatory frameworks will at least put some limitations on experiments like this from occurring. But I think that the response to that will be, well, hey, wherever that regulation is, we're just not going to allow people from there to participate. And we see that. How many projects, and especially for anyone here in the states, how many protocols, how many things you have to use a VPN for in order to access, just because people in the US aren't allowed to participate because of the regulatory walls that the government has put. It's getting a lot better now with the new administration, and hopefully it continues to get better with future administrations and everything like that. But yes, with more regulation, it will limit the amount of experiments that we see. But I'm hoping that we do enough experiments before that happens that we actually become or create something useful that can be used outside of crypto. Arshmella asks, do I believe in this quote? Most gamblers quit before the big win. I do. I do. But I think I don't even see it as gamblers. I think most people stop working before they hit like their big win. And I think that's just true about anything, People who are consistent and continue to learn and continue to grow and continue to better themselves over time will always beat someone that got lucky. And it's just more about persistence than getting lucky. All right. So parallels to trading, inflation control, weed having equals tokenomics discipline. The fact that they are realizing we can't just keep printing this token forever at this rate, we're gonna have weed having, that's inflation control. That's something that a lot of things that you should be looking out for. I mean, that's one of the reasons why Bitcoin is so valuable, because every 4 years the rewards split in half, and then it becomes even harder to find new Bitcoin. And then there's a cap. There's only 21 million. Once that cap hits, there's not going to be any more printed, and that's a big reason why people are like, "Oh, this thing's going to go to millions." Market share dilution, same concept as equity dilution. Early movers benefit, but ecosystems must attract new liquidity. We've talked about a lot about that today. if your project or your economy is based on how many more people buy your things, it's not going to work. Also, same thing. If you continue printing, it's not going to work because then people start to lose value in that. And a lot of that is to be said for things like even the U.S. dollar. Burn mechanisms, they reduce supply and they create a deflationary balance. But as we mentioned a couple times today, burn mechanisms don't mean anything if they're still printing more and printing more than they're reducing the supply by. PvP risk introduction. Similar to adding volatility into a stable system, it will reset the value discovery. So this right here is where we talk about like the lessons of like where season 2 potentially leads this specific economic model. Hey, where you stop rewarding people who are just early and have a big farm. Now let's make it about people who are actually participating in the ecosystem and being engaged participants. Those are the people that are going to get the reward, and that's going to reset the value discovery. An investor lens. So how can you actually look at this from an investor? What lessons can you take away from this example today for your next project that you look at? Always look for sustainable DeFi. So this sustainable DeFi game builds ongoing demand loops, not just speculative inflows. I forget who asked that question or where I saw that, but it's like, okay, how can you tell that something is Ponzinomics without the project telling you it's Ponzinomics? Just look at the read their documents, and we can do like we mentioned, we want to do that in future events where we can actually take examples from you guys, throw it on, and then be like, okay, let's look at let's all look at their documents together and figure out, is this Ponzi or is it not, or what are the green flags, what are the red flags? It's all in there. It's all about the language that they use, the numbers that they throw at you. Being able to read that and like understand those numbers and how they're presented is just going to tell you straight off the bat, oh yep, this is not sustainable. Oh yep, this actually has a chance of being sustainable. It's understanding, and it also comes with how much information those projects give you, how confident you can feel in those answers. And also another thing, when players spend for utility, not speculate for profit, you have long-term health, or the potential for long-term health. And this is where we're going to see season 2 sort of kick off. So to try to bring it back to the specific example, players are now spending what they're earning to continue being a participant of the economy instead of just speculating for profit as the first week was. Hey, I'm just going to buy a farm, print a bunch of tokens, and sell and make money for indefinite amount of times. Now it's going to be like, hey, you want to continue to earn, you need to also continue to spend and participate in the economy, just like any profitable and sustainable economy that we see in the real world today. And the question I want to leave here with for you guys is, would you rather farm a game where you can lose and win based on strategy, or one where early players always win? And that's how I think of that, and that's how I'm looking at this next push that they're trying to make with season 2. They're trying to go into a game where you can win or lose based on strategy, based on your specific actions and how you approach the game, instead of just like, hey, early players win, anyone that came after, sorry, but you're out of luck. And final slide here. I know we're over the hour, but 60-second takeaway for everyone here today. As we mentioned, this is just the example for today, but Addicted.Fun is a life example of a DeFi game trying to evolve beyond Ponzinomics. And that's why I put, or at least trying to. They're trying to, they use it as a hook. They use that as a way to print a lot of money and print a lot of attention, which is something more valuable than money sometimes. Having the attention economy is really important. They're trying to move beyond that by, implementing the strategies and the sustainability that we talked about. And the other takeaway that you guys should also take away today, sustainability is the new meta in crypto. I put crypto gaming, but it just crypto. People are trying to move towards sustainability, sustainable reward models. Like, that's the big thing, because at the end of the day, that's what allows us to move beyond the 3-month lifespan, the 6-month lifespan, and start creating projects that people are like, oh my God, I was in Titano for 5 years and Titano's still around today, or I was in X project and it's still around today and I've been in since early, and like, we will be able to, hopefully 5 years from now, we'll be able to look at a project that maybe we all found together through these To the Moon events and be like, oh my God, you guys remember 5 years ago when we learned about it in To the Moon? It's still around and we're still part of that project. That would be awesome. And like, that's where the meta is going. And I say meta in like, using the terminology that is used. but that's where the space is trying to go. Sustainability. The project is using game design, tokenomics, and social incentives to stabilize growth. That's another thing. It's not about the specific project, but how they're using game design, how they're implementing their tokenomics, and their social incentives to stabilize growth. So they had a big blow up in the beginning. How can they sustain that over the long term? And as we mentioned, this evolution mirrors broader DeFi lessons. You either adapt or you die. You either continue to grow and find new examples to make your stuff sustainable, or you'll be another project that survives 3 months and is gone. So that's everything that I have here for you guys today. I see some questions here on the side that I'm going to read through one last time before we start closing off. Let's see. Do you believe investor education plays a big role in sustainability than tokenomics itself? Oh, yeah. Oh, yeah. Big time, Crib. Being educated and understanding stuff for yourself is going to allow you to spot things early, spot green flags, spot red flags, spot opportunities way before way before the rest of the people are. Because like I mentioned, there's a lot of people who, like, I knew about this day one, like I had already seen the stuff about it, and I had the potential to be early. But the thing is that, like, I could look at it as in like, dang, I missed out on a lot more money if I would have gone in with size. But instead, I look at it as in like, okay, good. I saw the opportunity. I recognized the risk. I recognized the potential rewards. I went in with my proper rules that I don't put in more than a specific number into any of these things, and it ended up being a win. It could have it could have easily gone the other way, and it could have been a complete loss. But at the end of the day, it's the education that plays the bigger role. You understanding the risks and potential rewards on any play that you enter, and understanding that, and adapting your size and how much you spend or how much you invest into it based on those rules. Ben's asks his final questions. Do you think the future of sustainable DeFi gaming lies in creating closed loop ecosystems or in being deeply interconnected with the broader DeFi landscape? It's hard because we haven't even figured out how to make a sustainable closed loop. That to say that the right answer is a sustainable open loop. I think I think the answer is projects are experimenting in both and at different times. I don't think a project that says we're going to do close and open at the same time, that you're just trying to do too much at the same time. What I'm interested in on the flip side is, okay, maybe I find a couple projects that I pay attention to. I enter with small size that are closed loops, and then I enter a couple projects that are open loops and see, okay, which ones are most sustainable, which ones live longer, which ones were more successful, and to be able to take it from a personal lessons in that sense. What is the single biggest misconception that developers have when they try to build a sustainable economy for their game? This is what I'm about to say is controversial because a lot of people are gonna be like, "Wow," but I think people who try to build for sustainability first sometimes shoot themselves in the foot because sustainability is not attractive. Sustainability doesn't get people up in the morning. And think about it this way. We have like 38 people in the audience here. How many of you are gonna wake up excited about a new opportunity that offers you 3% every single year? No one. At least not me. I'll speak for myself. I am not gonna wake up excited about a 3% opportunity. What I will wake up excited about is a potential to find 100x. Because at the end of the day, that's why I'm in this specific space to like position myself to over time find more 100x's. I have 100x's in my portfolio and in my history, and I continue through education, through proper due diligence, through doing my own research. Can I put myself in a position just like someone batting in baseball? You're not going to always hit a home run, but if I'm there every single day batting at batting, I'm going to hit a couple of them instead of someone that just sits on the sideline and watches. And that's how I sort of see myself. Like, the biggest misconception for a lot of games is we're going to go straight out the bat with sustainability, but then they fail to get the attention or generate. A lot of people call it hype, but I call it attention. If you don't have the attention from people, investors, gamers, people who are going to participate, none of it matters. You can have a sustainable ecosystem for 5 people, but you're still going to have to shut down because you don't have revenue. The revenue comes in from keeping attention and maintaining it. That's why I think this example today is so interesting, because they hooked everyone with the thing that they know that it's going to work on sustainability, but they're going to try to keep people around with sustainability. That's why I think it's a really, that's the biggest misconception, that just because you build something sustainable, people will come. I think that's just wrong. I don't think that's right. The young prof asks, what parallels can traders draw between DeFi game sustainability and traditional market mechanisms like inflation control? All right, I'm gonna have you're gonna have to ask those questions in more plain terms, because like you're throwing a lot of different words at me, and I don't know. I'm not sure if like I fully understand what you're trying to ask. What parallels can traders draw between DeFi game sustainability and traditional market mechanisms like inflation control, dilution, and volatility management? I will have to put a pin on that while I think about it for a second. The young prof also asks, how can DeFi game designers create genuine demand loops where players spend for utility and engagement rather than short-term speculations? How can they do it? That's still the question, and that's the question that this specific example today is trying to answer. I don't have the answer for you because no one has the answer yet. I think that's what we're still looking for, right? At the end of the day, we mentioned today that even though it's been 4 years since the 101,000 APY projects that we all fell in love with and learned to hate over time, we're not that far. We're not that far ahead. It's been 4 years, and we're still talking about super unsustainable economic models because someone's still trying to find the answer. I mean, just like with regular gaming, play to earn, play to airdrop, play to skill to play. All these terms don't mean anything until something actually works and is sustainable for the long term. So I don't think anyone's created those loops yet, but we're still working our way there. And would a game economy driven by strategy, risk, and fair competition attract more long term participants than one dominated by early? Yes, I think so. And I think maybe. Actually, I won't say yes. I won't say yes definitely, but I'll say maybe. Because that's at the end of the day, that's the the theory that we're testing and we're gonna be watching through this specific game. Addicted.fun, that's what they're claiming to be able to do, and that's their hope. Will it work? Your guess is as good as mine. I would love for it to work, and I'll say that because if it works, then that's something that's like a next step that we take as a space. I'm rooting for teams that have unsustainable economies that can turn it sustainable. Like I'm rooting for all of them. Like I would love to see a 100,000% APY actually work. Because who wouldn't love that? That means that you're actually, making something out of thin air and making it work and making it happen. Do I have the answer? I don't think anyone does yet, but I would love for anything to work. And then, sorry, I love looking at the future. Hey, the young prof, me too. That's why I was I was looking at this with excitement because no one knows the answer, whether this will work or not. But I'm excited to come back in 2 weeks and be like, hey, it worked, or hey, it tanked. And although we talked about it, ended up being in theory. What's my favorite color? My favorite color is it's actually not a color; it's a shade. I love black. But I think that's pretty much everything. I appreciate everyone being involved. I know this one was a very different to the moon event. It wasn't so much about like trading Bitcoin and Ethereum and charts and looking at everything, and more of a like theoretical point of view of like where sustainability is at today. But I think it's an important conversation because I mean, just based on the examples that you guys gave me today, you guys have seen unsustainable economic models. We all have, and we will continue to see them. The important thing is like how to spot them, how to know like if you're going to enter them, how to enter them safely. But the other thing is like how can we as a space inch closer and closer to turning something from Ponzinomics to sustainability? That's the question that we're asking here today. And even though we're walking away without a definitive answer, hopefully you guys are all walking away with like, okay, cool. At least the problem is being worked on.
All right, guys. So on that note, we're ending this now. I appreciate all you coming out, taking the time to listen to Caesar and me, and me when I pop in, yap about stuff. So